The S&P closed Friday at $653, $3 above the most important level of 2025. If it breaks $650, we're not buying the dip anymore. We will be managing a correction then. Last week gave up 2.5% in one session because Trump decided tariffs sound fun again. This week, banks report Tuesday, CPI drops Wednesday, and if that shutdown doesn't end, half those data points disappear. Let's get into it. All right, last week was a masterclass in it's not over till it's over. S&P opened Monday at $671.62. We hit $674 midweek to new highs. Everyone's feeling good. Then Friday 11 a.m. happened. When Trump escalated trade war threats with China, he got into export controls and tariff talks. So the market said nope. The S&P closed $653.02, down 2.4% for the week. Triple Qs fell 2.3%. Tech and semis led the sell-off. The Russell 2000 small caps got destroyed, down 3.3%, the worst performer of the bunch. The Dow Jones blue chips couldn't hide either, down 2.7%. Three catalysts drove this. 1. Trump's tariff threats China on Friday. That's your headline. That wiped out the entire week in one session. 2. Government shutdown hit day 10. 1.5 million federal workers not getting paid. Military paychecks start getting missed October 15th. That's this week. Consumer spending is about to take a hit. 3. Valuation check. S&P forward PE dropped from 24 to 22.5. Still elevated. Still reminds me of 2018 when we dropped 16% in 2 months. Sector rotation, defensive. Utilities up 1.3%, consumer staples up 0.5%. Everything else, red. Energy down 4.2, consumer discretionary down 3.7. Tech dumped Friday. Market internals, VIX spiked to 21.7, up 30% week over week. 10-year yield fell to 4.05 as money ran to safety. Gold still climbing, trading near $4,000 an ounce. Bitcoin, volatile. Hit 125K early week, sold off to 113 by Friday. Update on my trades. I closed my Coinbase calls Wednesday for a 20% gain, got lucky on timing. Net positive for the week but could have been better. Behind the curtains, here's what institutions were doing while retail panicked. SPY dark pool showed 68 trades totaling $7.3 billion. Big money bought the dip. Their hedging put-call ratio elevated at 0.65, but they're buying. This week kicks off Q3 earnings season, and we've got data that could move markets if the government actually reopens. Tuesday, before the bell, JPMorgan, Wells Fargo, and Citigroup, the big bank trio. This sets the tone for earnings season. We're looking at loan growth, net interest margins, and credit quality. If consumers are hurting from the shutdown, it'll show here. Johnson & Johnson also reports this will be the healthcare bellwether. Fed Chair Powell speaks Tuesday. After last week's sell-off, everyone's hunting for clues on rate cuts. Don't expect anything groundbreaking, but watch bond yields. United Airlines reports earnings Wednesday, with investors closely watching passenger revenue and forward booking trends as key indicators of consumer travel demand and discretionary spending strength. Also Wednesday before market open, we have the CPI, year over year and month over month. Core CPI 2. This is the report of the week. Inflation data drives Fed expectations. Consensus isn't out yet because of the shutdown. But if inflation is still sticky, risk off continues. Thursday, we should get the jobless claims. Core retail sales, PPI month over month. Housing stats and building permits. Philly Fed Manufacturing Index. That's a lot of data assuming the shutdown ends. If it doesn't, market flies blind and volatility spikes. Charles Schwab reports before the bell Thursday also. That is a retail investor activity gauge. Taiwan Semiconductor reports too. TSM is huge. It is the semiconductor bellwether, AI chip demand proxy. After last week's tech sell-off, this could be a catalyst. Then Friday we got the unemployment rate. That's a big one if it releases. We also have University of Michigan consumer sentiment, a preliminary reading. After missed federal paychecks and tariff fears, sentiment could tank. And American Express reports before the bell on Friday that is a consumer spending health check. If discretionary spending is weak, AXP will show it. The next FOMC meeting is October 28 to 29, not this week, but Powell's comments Tuesday matter. Senate's back Tuesday. House still in recess. Shutdown stalemate continues unless something breaks. Big picture. Most of that economic data depends on a shutdown resolution. If it extends, we're trading blind. That's not bullish. All right. One setup I'm watching this week, not financial advice. This is what I'm doing with my account. NVDA, the AI juggernaut. Current price, 183.16. Average volume, 173 million shares. Market cap, 4.4 trillion. It's liquid. It moves. Cantor Fitzgerald raised their price target from 240 to 300 on October 9th. They're citing AI demand, data centers, enterprise adoption, all that. NVDA reports earnings November 19th. That's a month out, but positioning starts now. Despite Friday's tech sell-off, sector rotation into AI names is real. The technicals are support at 183. That's a major level. Resistance at 194, and it's holding above the 50-day moving average. Golden Cross is still intact from June 27. RSI is around 51, which is neutral territory, and got room to run. MACD is showing bullish momentum, plus volume's been above the 20-day average on up days. NVIDIA's options flow. This is where it gets interesting. October 10th, 168,000 contracts traded. That's 13% of total volume. Heavy call interest at the 195 and 200 strikes. Put-call ratio is skewed bullish. Smart money's betting on upside. My entry plan, I'm looking to enter around 184 above support. Stop loss at 181. That's tight, $3 risk. Target's 193.50. That's near resistance, a little above 3-to-1 risk-reward ratio. Position size, $1,000 position. Let's say I'm buying weeklies October 31st expiration, 185 calls. Those are trading around $750 to $800. I'm buying 1 or 2 contracts max. If it breaks below 181, I'm out. If it hits 190, I'm scaling out. I will sell 1 contract and let the other contract ride. Time frame, 2 to 5 day swing. This isn't a long-term hold. I'm playing the technical bounce and options flow. Quick note, Broadcom's also on my radar at 322. KeyBank has a 420 price target. But I'm not doubling up on semis. Pick one, NVIDIA or Broadcom. I'm going NVIDIA for liquidity. Now let's talk about what to avoid. Sectors to fade. 1. Consumer discretionary. It's already down 3.7% last week. Tariff headlines are crushing margins. Earnings growth is weak. Valuation's still high. Wait for better entry or avoid entirely. 2. Energy. Down 4.2% last week. Demand's weak. Oil's at $57. That's a recession signal historically. Until crude stabilizes, I'm not touching energy stocks. Overhyped stocks from the meme traps is GameStop. Same playbook. Business model is broken. Retail's chasing nostalgia. Institutions are selling. Behind the curtains red flag. Consumer discretionary ETF XLY. Showing elevated put buying last week. Institutions are hedging downside. That's not bullish. If you're long consumer names, tighten your stops. Chart of the week is S&P 650. That's it. That's the chart. Friday's close, 653.02. Weekly low, 652.84. We're $3 above the line in the sand. Here's why it matters. Break below 650 decisively with volume. And we're confirming a trend reversal. Next support's around 640. That's another 2% down. From there, 620's in play. But bounce off 650, and institutions are right. Dark pool data showed $7.3 billion in SPY accumulation last week. If we hold and bounce, that's a dip buying opportunity. How I'm playing it. If SPY holds 650 Monday and Tuesday, I'm looking for long entries. If it breaks and closes below 650, I'm in cash gang mode. Risk off accelerates fast. Context. We're 3% off recent highs. 2018 saw individual stocks drop 30 to 60% during corrections. Oil's at 57 could be a recession warning. Gold's up 50% year to date. Classic pre-recession setup. I can't afford to diamond hand through a correction. All right. That's the blueprint for October 14th through 18th. This week, CPI Wednesday, Banks Tuesday, TSM Thursday. I'm long NVDA if setups confirm. I'm avoiding consumer discretionary and energy. I'm watching SPY 650 like a hawk. If you got value, hit the like button, drop a comment. What are you watching this week? Subscribe if you want the midweek update Wednesday. Real trades, real P&L, no BS. Protect your capital. Nobody rings a bell at the top. See you next time.